Hey everyone, welcome in to another daily editorial here on the KE Report. We're chatting with Dave Erfle, and we're going to be talking about the gold market. Gold holding up around 2,400. It's more or less moving sideways after that volatility last week. And quite frankly, it really does just feel like we are kind of in summer trading action. But hey, summer trading around 2,400 gold, that's not a bad price at all. Dave is the founder and editor of the Junior Miner Junky, which we will link to in the show notes. Dave, when we look at the gold price, again, it's flat mostly. It's up a little bit today, but more or less just hanging around that $2,400 gold price. A lot of eyes coming up on the Fed meeting. There's also some earnings from gold companies coming out this week. But I guess when we look globally for the gold market, what are some of the key factors that you see as maintaining a stable gold price here at these generally historically high levels?
Yeah, Corey. Well, the gold price really started to move higher during this now 3 month consolidation. Look, we've had a sharp reversal on Friday, and all it did was bring it back in down into the consolidation. It's still making higher highs and higher lows, but a big catalyst for that was Federal Reserve Chairman Jerome Powell basically coming out and saying, "Look, we're going to be lowering interest rates before inflation gets to our 2% target." And that's basically the Fed raising the white flag on inflation. And that's why the gold price started to really move above 2350 and then above 2400 and make another all-time high. But it's remaining up there because we got lower inflation, and it's coupled with signs of a slowing job market. And that's basically reinforced the Fed is going to be lowering rates in September, while the inflation rate is still well above their 2% target. And at the same time, we've got this U.S. election chaos going on. First, we have assassination attempt on President Trump on one weekend, and then the next weekend you have the current president dropping out of the race and pretty much disappearing. So all these things are keeping gold well bid above 2,400. So tomorrow we've got advanced Q1 GDP data coming out. So if that shows growth slowing in continuing to slow in Q1, and then we got the PCE inflation data coming out on Friday, and that's the Fed's preferred measure of inflation. If that shows inflation easing, that's going to pretty much cement a September rate cut, which the Fed might telegraph in their July meeting, which is next Wednesday. I mean, the Fed's on blackout right now. We're not hearing anything from them, but that's what the market's waiting for.
Well, Dave, if we widen the scope up globally too, there's some other drivers you had mentioned off mic dealing with the Indian import tax, import duties on gold, but also worries about China. It's not like the rest of the world's lighting on fire with growth either. So, and there's some political people in different countries as well. So, do you think that there's some global forces also keeping the yellow metal well bid almost in every currency on the planet?
Yeah, I mean, yeah, we talked off mic the beginning of the week. China cut interest rates again. But the second more important development was today's announcement that India lowered import taxes on both gold and silver from 15% to 6%. That's quite a cut. So this opens the door for a pretty big surge in long-term Indian physical market demand. So that's keeping the gold price well bid here this week also. So with what's going on, I mean, let's face it, we got a perfect storm in going on for catalysts in the precious metals in both geopolitical and macroeconomic.
Dave, why do you think we've seen a bit of a decline in terms of buying globally out of China, out of India over the last, I guess, month, 2 months now?
Well, I think it's the higher prices, right? I mean, it's always tough to believe what China said. They might say they've stopped buying gold the past 2 months, but that might not be the case. They could be doing it without telling the market. I mean, remember they came out several years ago. They came out and said, "Oh, by the way, we have this much gold now," and they never told the market that they were accumulating gold again. But other central banks are continuing to get rid of their dollars and buy gold with those dollars. So I'm not saying that the dollar is not going to be the world's reserve currency anymore in any time in the near future, but these central banks continue to buy gold and add it to their growing piles.
Well, Dave, I want to float an idea by you that somebody else brought up on the show, and that is that With the East having underpinned a lot of the buying up until present, along with central banks, again, most of the central banks doing the buying were also in Asia and in the East or the Middle East. So when you think about how much buying has happened in the East, if Western investors ever do wake up out of their slumber and really get active in the sector, that would bring more not into just the metals themselves, but it would also translate over into the equities traded in Canada and the United States, the gold and silver equities. Could it be the perfect storm that the East has supported us up till now, but if the West actually starts buying, maybe that's the next wave of this cycle?
Right. I mean, that's what we've been waiting for so long, right? That's the key missing ingredient is Western investment demand. As central banks continued to buy all the way up to from when the gold price broke out above 2100 in March and moved up $450 in the space of about 10 weeks, Western ETF demand continued. We continued to see outflows while central banks were continued to show inflows. So yeah, I mean that is the key missing ingredient. We're starting to see that turn around a little bit, but we really need to see investment demand pick up in the West.
Are we starting to see that turnaround? Look at the volumes on GDX, though, Dave. They're back at levels that are even lower than when we were talking about the low volume levels of a couple years ago.
Yeah, well, now you're talking about shares. I was talking about ETF demand mostly in GLD, but yes, the shares, if you take a look at what happened after the GDX hit major resistance at $40 last week, we had a reversal, but during that reversal, we've seen lower and lower volume. So if this reversal was taking place on a higher volume and gold stocks were starting to show relative weakness to the gold price again, I'd be a little concerned. But since the volume is very weak on this sell-off, I'm not really that concerned. And as we talked about last week, Newmont kicks off earnings season tomorrow after the close, and I expect them to show a second consecutive quarter of blowout profits. So that should perk up the interest of the street, especially these generalist funds who basically stayed away from gold for the past decade. They're going to have to start getting interested again because you see back-to-back blowout quarters from the world's largest gold miner. That's going to pique some interest in generalist investors.
Dave, do you think interest in gold stocks would spill over into silver stocks? Because if you look at silver or even copper, they've really taken it on the chin the last month or two compared to gold, and the equity is obviously under pressure in both the silver and copper stocks. Do you think interest in gold would lift the whole sector, or will it be isolated to just the gold stocks?
Oh no, it's already come into silver. We've already seen huge moves in a lot of these silver juniors, especially the ones traded on the big board. You've seen stocks like Coeur d'Alene and Endeavor Silver and Gato Silver and Avino Silver. They all have big board listings, and you've seen them go up two or three times already from their March lows, late February, early March lows. And as far as profit taking is concerned, you're not seeing that much profit taking considering the silver price came off pretty quickly from around 32 back down to 29. So I think the silver price has actually come down to test its rising 18-week moving average this week, like gold did a few weeks ago. I think there's good support at 29. It's trying to go higher, but that silver deficit is real, and now it's in its fourth year. And I think the Silver Institute expects the deficit to grow by 17% this year. But the paper market is still ruling in silver, so we have to follow that. But the stocks are acting well in relation to the silver price.
So how do you go about analyzing and isolating some of the better silver stocks? Because now, look, a lot of these silver stocks, you're right, are double, some triple off of their lows from earlier this year. You can make the argument there's still a lot of upside to go when you look at some of the levels that they traded at years and years ago. But with this kind of sector-wide rebound in a lot of these silver miners, which ones are higher quality?
Yes, that's the rub. And since it's taken so long for the silver stocks to get off the floor, it's given investors a lot of time to sort out the wheat from the chaff here because let's face it, there really isn't a lot of silver juniors that are worth investing in. I think I found the ones that are worth investing in, and the ones I am invested in for myself and my subscribers are starting to do a lot better. But you just take a look at the management teams, of course, first, and the projects at the same time. I mean, where those projects are located, how they've managed capital markets. Take a look at the share structure, because they might have this great project, and if they got a blown out share structure, that's going to limit the upside, especially if there's a lot of warrants in the share structure. So you have to look at all these things, but management is key. If they've done this before and they've taken a company from discovery to construction, or they've taken a company from discovery to a buyout by a major and made shareholders 5, 10, 15 times their gains, and they're trying to do it again, those are the companies you want to look at as well.
All right, Dave, always great chatting with you. I know kind of a slower news cycle for the precious metals right now, but it's going to pick up this week as we start to get some earnings. It'll be very interesting, and I think quite important to see how the market reacts to all of these earnings reports. Dave, thank you as always for your time, and everyone, click that link in the show notes to learn more about the Junior Miner Junky.
All right, thanks, guys. Have a good one.